Hello, this is the tradesight U.S. Stocks and Futures Market Preview for the week beginning Monday, the 20th of October, and going into Friday, the 24th. Hope you're having a good trading week. We just completed a wild week on Wall Street and options expiration for the month of October. October is often a crazy month. We predicted this. And although this is certainly more volatile than I was probably expecting. And we are in the middle of the core 8 days of earnings as well, which gives you an idea, even though this has been extreme, when we look at the intra-week action, just to understand that these gaps, getting gaps at least, maybe not this big, is normal in the core 8 days of earnings. And that's quarterly. So it does give you an idea that the market's just a little bit different, everything reacting to earnings, but there's been a lot more going on, obviously, than just that. Here's a look at the ES. This is the S&P E-mini front month futures contract on the daily chart. We'll look at, it's hard to see the intraday action based on this because this is a continuous contract. You can see we did rebound Friday, though, after being down for the rest of the week. Here's the NASDAQ 100 cash index. Here you can see Friday's gap up. By the way, look out if Monday's a gap down again, because that would trap those people like a floating island that are in on Friday, and that wouldn't be pretty. Overall, again, for the week, still down. Here's the SOX index, actually came back up for the week a little bit, retesting that moving average. Biotechs, basically, just a little less than even for the week. Crude oil, have a look at this, closed at 82.97. So lower prices at the pump ahead potentially. Gold was up. Look at Google. Let's look at some of our majors. Obviously fell apart this week, approaching the lows of the last 9 months. Apple's been just really boring lately. It stays within a couple points of 100. Used to be such a great trading stock. It's just disappointing to see. Here's a look at Amazon. We made some money on the short side of Amazon on Friday. Hasn't gone too far for the week. Tesla, obviously, on a downtrend of late. Netflix with the big gap down this week. This will look goofy. Lost 100 points overnight on the earnings. This is why we don't hold stocks through earnings. All right, so let's take a look at the intra-week action. Get a feel for what actually happened, because it is an interesting story, even if a little bit crazy. So we'll go to 10-minute bars on the ES futures contract. And here's what we got. Monday was a flat opening. We kind of wiggled around a bit and then rolled over and continued. Remember, the prior Friday had been pretty negative. We continued that negativity. We had a real nice session on Monday, going to the downside. Tuesday, we got a little gap up and sold off. We had a nice stock session on Tuesday morning with some on that pullback. There were a lot of stocks that really fell apart, and we did well on that. But then it rebounded a little bit, came back late in the day to fill the gap for the day, and closed just barely positive. Wednesday, we had a pretty big gap down and made a weak attempt to bounce early, then rolled to new lows pretty sharply, came back and exactly tested the highs in the afternoon before rolling back to the VWAP area for the close. Thursday, we repeated this with another gap down. This time we came up to fill the gap and actually reached above Wednesday's highs, pulled back and closed right on the VWAP almost exactly. And then Friday, we gapped up. This filled the gap that was left behind from Tuesday's close to Wednesday, and have an inverted cup and handle formation. But again, Friday was options expiration, and even though obviously a big gap in the S&P of about 18 points and some volatility, about 20 points of volatility is still good on them. It looks good. It really wasn't that interesting of a session, and that's what happens when you get options expiration. All these stocks are just kind of drifting and non-technical. All right, let's take a look at the NASDAQ side. Here's the last 5 days on the NASDAQ and futures and 10-minute bars. Again, Monday flat opening, down a little bit better. You can see why we made money. We got a 13 buy signal at the low there on the bounce, and then sold off again in the afternoon. Tuesday, slight gap up, filled the gap early and closed right there. Wednesday, there was the gap down. Pretty big gap, about 50 points on the NDX. Little bounce and then rolled. Came back to the highs and then rolled again for the close. Again, another big gap down, this time 50 more points all the way to the lows of the prior day. What's interesting about Thursday is that even though it looks pretty volatile and you have the big gap, and remember, you're getting gaps. The big gaps are Wednesday, Thursday, and Friday. Remember, the earnings releases, the big ones are after the bell, Tuesday, Wednesday, and Thursday. So these gaps are largely not just about the economics, but about the earnings releases, which is why the core 8 days of earnings, this is what I was talking about, can be a little crazy. Maybe they don't get 50-point gaps usually, but you still get gaps, and it's because of the earnings. But Thursday was actually inside Wednesday's action completely. So it was an inside day, despite the fact that we still traded about 80 points of range on the NASDAQ. And then Friday, a big gap up, filled the gap from Wednesday morning, and again, closed right about there. So for the week, amazingly, the NASDAQ only lost we'll call it about 60 points, and the ES futures contract, or this S&P, lost only about 20 points. Sorry about my alerts going off here, but they're just showing me as I pull these up some signals. So about 20 points on the S&P. Doesn't sound bad. Obviously, we were significantly lower. Now let's go take back to the daily chart because I want to show you volume, and this is important. We talked about how bad volume was in August and that it would come back in September, and it did. And now look at volume here. Friday, which was options expiration, usually has great volume, was actually the worst volume day of the week. All the other days, one of them was 2.8 billion shares on the NASDAQ. The 10-day moving average of volume is now 2.25 billion shares, the highest point of the year. So we are back in that zone. Obviously, when you have this kind of volume that's good, when you have these big gaps, those days aren't as interesting. They're not as clean as, say, a Monday or a Tuesday was because you've got the gaps. It ruins certain patterns. It doesn't give you the technical entries. So we like the volume. We like having some of the volatility. We just like the moves to be cleaner. But we are patient. We wait for actual triggers. We don't just jump around and chase a bunch of things because that doesn't lead to anything positive. Economic data coming out this week. Nothing at all on Monday. On Tuesday, we've got existing home sales. On Wednesday, we've got the CPI with MBA mortgage index. CPI is obviously an important number with crude oil inventories a couple hours later. Thursday, just initial and continuing jobless claims and the F8 housing price index, along with leading indicators in natty gas. Friday, just new home sales. We are just another week after this one, and we will be going to the time change here in the U.S. the following weekend after Halloween. Note that the quarter ends on a Friday, the month ends on a Friday, which is good. So if we have any month-end window dressing, any reason for the market to slow down, it's going to be on a Friday, which is usually slower anyways. It's also on Halloween, which might be a little late as people prepare for the festivities of that weekend. November's another great trading month. But again, we're going to get through the next 4 days. Monday through Thursday are the last 4 days of core earnings, and then really get back to just a pure trading environment all the way for the next 4 weeks until we hit Thanksgiving. It's usually a great time. And then December is good until the last week or two as we hit the Christmas season. So we're in a great time of year for trading. You just got to be picky about your entries, picky about time of day, picky about watching out for those holidays. And we definitely watch market direction, because when you get this type of volatility, if you're wrong, you're in trouble. And if you can do everything you can to get good entries and then still manage them great, then you're going to be in good shape. It's a great trading week here. All right, everybody have a great session this week. We'll be around in the trading lab to help you out as usual. Charts brought to you by eSignal. Have a good week.